Welcome back to FT Markets. The European Central Bank's just held its monthly meeting in its swanky new offices in Frankfurt. The ECB is under a lot of pressure to launch quantitative easing in the Eurozone to boost inflation and growth. With me to discuss what was new in the press conference by Mario Draghi, the ECB president, is Ferdinando Giugliano, the FT's global economic news editor. Ferdinando, was there very much new in today's press conference? We're still waiting for QE.
Well, there were two things which were new, but they were not the big one in a way. So the first thing were the forecasts, the new forecast by the ECB staff.
A lot gloomier.
Which are a lot gloomier.
Growth.
Both for growth and inflation, down to by a third for next year. So a sharp revision.
That's falling oil prices basically on inflation.
Well, not even that, because the new forecasts don't even include the sharp jump in oil prices which we've seen in the last. The sharp fall in oil prices. So there will be more gloom for inflation in a way, although not for growth, which might be boosted.
Okay, so that was quite dovish.
That was the first thing. And the second change we saw was in the forward guidance. And that really relates to the way the European Central Bank has been describing its intentions, or what it wants to do with its balance sheet.
Yeah, it wants to expand its balance sheet, Mr. Draghi said, back to 2012 levels. Explain to us the incredibly important but very subtle difference.
Yeah, there was a small lesson in semantics today by the ECB. Draghi said the ECB used to say that the ECB expects to increase its balance sheet back to 3 trillion.
Early 2012 levels.
Yes, exactly. But now it says it intends to get there, and it also clarified that this is not a target. So it's no longer an expectation; it's an intention, but it's not a target.
Why all the semantics?
Well, there is a fight going on in the governing council. It's quite clear.
Bundesbank.
The Bundesbank doesn't want this to be seen as anything like a target, and actually, we imagine that even the small change in the forward guidance today from expectation to intention was resisted by the Bundesbank because it was not unanimous.
Draghi said it was not unanimous. So a lot of semantics, I said ironically, they were very important. Maybe they're important to ECB watchers, but markets unimpressed. I think shares are.
Yeah, they were hoping for some hints on QE, maybe a little acceleration, some time scale of when it will happen. Nothing of that.
Okay, let's try and look forward then, drawing lessons from what we've heard today. Draghi talked about them reviewing their monetary policy stance early in 2015. He didn't say that would necessarily be January, he just said early 2015. But if we look at our chart on inflation, inflation is the actual inflation, the red line is below the ECB's target, the 2% target, and inflation expectations, what markets expect inflation, have really plummeted. What's your best guess, Ferdinando, about what the ECB will do early in 2015?
Well, I think, as you say, the red line in particular is significantly below the target. And today, Draghi again insisted that the ECB must, in a way, meet its target, and it will do so. So I think they will come under increasing pressure over the next few months. The big question, I think, is when Draghi will start becoming impatient. He's already, I think, impatient. When he will start when he will decide that he actually doesn't care about unanimity and just go and press the QE button.
He said it was possible to do QE without unanimity. The other thing he also said was that he was asked what assets they might buy under QE, and his answer was basically all assets apart from gold. So,
well, he also ruled out foreign assets.
He did rule out foreign assets as well. But that could also mean that maybe they're thinking of something other than government bonds.
Yeah, I mean, there is this talk of corporate bonds as a potential alternative. And again, the way they would structure a sovereign bond purchases is still unclear. There's lots of talk of kind of synthetic assets combining all different government bonds. So it's not clear. But I think the important thing which markets want to know, they want the ECB to buy some assets which are there in large quantities. Because at the moment, there are schemes, for example, the ABS. There isn't that many ABS around for the ECB to meet its intention.
My impression from Draghi's comments was that he very much intends to do something. It's about waiting a little bit longer, though. Was that your impression as well?
Well, I think, yes, today was, in a way, a small tactical retreat by Draghi. He didn't want to annoy his opposition on the Governing Council with big dovish statement, but I think he will come back in the new year and there will be something up his sleeve.
Ferdinando, thank you very much. So perhaps a small tactical retreat then by Mario Draghi, but at least in our view, we can expect something more from him early in the new year.